Well, good morning. We are going to present our final project. The team is conformed by José Alejandro Hernández, Diana Castro, and Jorge Peregrina.
We are an innovative project with the purpose of raising an environmental improvement to society, generating a positive change through the use of microfibers for the creation of networks, avoid plastic bags, encouraging their use and another alternative cover the same need. Our business model is a startup. We are focused on the industrial sector. Our main objective is the production and marketing of plastic fabrics to be able to make a microfiber bag that meets the same needs as a conventional plastic bag.
The main objective: get sales network in supermarkets in Mexico. Spread the brand and the product on social networks to increase sales by 10%. Implement discounts and sales promotion for our first buyers in order to make ourselves known in the market. Reduce production costs by at least 5% per year. Avoid losses of inputs in production in order to reduce our variable expenses. Increase our capital investment in the first 3 years in order of 30% annual.
Our market research. According to our investment, some benefits that we could get it are innovation, a new brand product on the market, feels that this bag fills the same need, that it is portable and reusable product. We have a social inclination towards change. We have an environmental campaign. We reduce plastic waste. We have a big volume of production, that the raw materials are easy to collect, and also that the microfiber bag support 13 kilos and is recycled, and it's friendly to the environment.
The price per unit is 10. We have 2 machines. However, the first produce less than the second. Our total production is 210,000 pieces per year. Our initial investment is divided into equipment, delivery and installation, machines, cars, building, with a total of 4,095,000 pesos.
The project revenues. According to our revenue budget, our units in machine number 1 increased by 3%, and in the sales price by 4%. However, in machine number 2, when producing more units, the number of units increases by 5% and the sales price by 4%, just like machine number 1.
Expenses and the cost budget. We calculate the total cost, obtaining the variable cost of each one of the machines and adding the fixed cost. Within the fixed cost, we have all the selling expenses, which increase by 5% each year, in addition of the administrative expenses. That one increased 2.5 each year. The total cost and expenses of the first year we have 1,196,175,000 as a result.
We must depreciate each of the company assets. In this case, we depreciate the building with 5% per annual, the administrative team 10% per year, the cars 25% annual, and the production machines 30% annual. Each of these assets we are depreciate in accordance with the EISR law.
Net working capital. To calculate the net working capital, we multiply our annual sales by 10%, that was the value granted for the annual increase. In order to calculate the change in our net working capital, we subtract the first year against the previous one, and so on.
Our net investment. To the initial investment will be added all the permits to be able to carry out the company activities without being fined. In addition to the training that will be given to each of the employees, so that they meet the knowledge necessary to practice in each of its areas. Finally, the change in net working capital will be added, giving to us the total of 4,055,000.
We calculate the WACC with a value of KD of 25.75% offered by the bank Citibanamex. The inflation of the last quarter was 7.07%, which when aid give us a total of 32.82%, referring to the cost of equity, which, as we know, cannot be less than the inflation. What lead us to obtain the formula to calculate the KY after taxes, giving us the value of 18.03%. To calculate the WACC, we obtain the total capital structure and multiply by 30% to obtain the debt. The subtraction of these two gave to us 70% of equity. Adjusting the W and the K to the operation, giving us a WACC of 28.33%.
Cash flow 10 years. We calculate the 10-year cash flows where revenues increased by 4% each year and expenses increased by 5%, subtracting taxes, giving you positive figures in each of the year. Profits on sale were 1,080,000, less sales taxes gives us a total of 2,456,290.79. We implement each of the net cash flows until giving a positive value, which means that the investment was returnable in a period of 5 years and 6 months, with an internal rate of return of 2.59% and a probability index of 0.49.
Our evaluation techniques. Well, interesting comments. Despite the fact that our numbers always behave positive during our calculations, in the end, we realize that our project is not available. Since our return on investment is time too long, so we began to see profits until year 5. In addition to the fact that the internal rate of return with 2.59% does not exceed the financial rate, which is 28.28%, the WACC, and these grants and endless cycle for the project.
The recommendations for possible solutions highlight that the company should look for another bank to be able to finance the project, or the selection or third parties to avoid any long-term interest. On the other hand, try to reduce production costs or increase sales. to obtain a short time in the return process, or increase the internal rate of return to be able to beat the WACC and be able to pay that interest debt in a prolonged time.
The general rules establish the investment project in real life. If the project were to be granted in real life, we would start looking for the initial investment to collect the necessary amount of money and start buying each the necessary resource to carry out the project, the production. We know that the tabulation projection are simply data. What is speculated is only a long-term vision of what could happen within the project. However, we are not taking any external factors such as technology, the economy of the country where we want to start, in case there is a fall of the currency against others. Thank you very much for your time.
And that's all. Thank you so much.
Yeah.